Okay. All right, well, good afternoon, everyone. I apologize for having my back to the ones in the audience. I'm going to make sure, because we're live streaming this as well, so I'll make sure to talk to the camera, and hopefully you can hear me as well. I'm Michael Cunningham. I'm the chairman of the Community Housing Resource Board of Anderson, and we want to thank all of you for coming out tonight for our credit workshop. We'd also like to thank the City of Anderson for always being a steadfast supporter of the Community Housing Resource Board, as well as Upstate Federal Credit Union, who our representative will be here tonight to take us through our credit workshop. And we have done a number of forums on everything from fair housing to first-time home ownership. But I think this is probably one of the foundational things that we can talk about as you talk about home ownership and these other things. I think you'll hear it all starts with understanding about credit and what you can and should be doing in order to help establish and build on your credit. So at this time, I'd like to introduce our presenter for the night, Ms. Tasha Norfleet. I'll give you a little bit about her. Tasha is the Community Outreach Manager for Upstate Federal Credit Union. She has been with that credit union for 14 years. She started as a head teller, and then she has worked from everything as a lender, assistant manager, mortgage loan officer, and more. A total of 17 years in the credit union industry. And she's currently 3 classes away from getting her economics degree. So congratulations in advance on that. I'm sure you will do a great job. And it says here, it says, my passion is helping underserved communities. I teach financial education classes and counsel credit union members and others in the community about the importance of money management. I also consider myself an affordable housing advocate. I've done extensive research of the counties in the upstate that can benefit from affordable housing and services. And so here's also, I think, what's wonderful is my end goal is to see a rise in affordable housing and access to financial education in Anderson County and also other counties in the upstate. So great personal mission, one that aligns closely with the Community Housing Resource Board of Anderson. And this time, I will turn it over to Ms. Tasha Norfleet with the Upstate Federal Credit Union.
Hello, everyone. I am excited about this workshop. Of course, I hadn't done any classes in a long time because of the pandemic. So this is actually my first workshop since 2020. So I'm used to facing everyone. So I'm sorry if I turn around. I'll try to face the camera. But I'm very excited in this workshop today. It's actually about credit. So credit is a very important thing today in the world. And we need to speak more about it and learn more about it because it affects a lot of things. The first thing I'm going to talk about is what is credit. Credit is the ability of a customer to obtain goods or services before payment based on the trust that payment will be made in the future. Now, I wanted to touch on specific points of this slide is that inability and ability. So if your score is on the lower level, you might have less of an ability to borrow or accomplish the goals that you want to, the financial goals you want to in life. If you take care of your credit, you could improve the ability, increase your ability to borrow and accomplish different goals that you have in life. Types of credit, there is personal loan credit, mortgages, credit cards, store cards, which is like TJ Maxx, Lowe's, Amazon, a lot of people are familiar with, and even your mobile plan is a type of credit. Also, there are utility credit plans out there. So it's always important to pay these type of plans and these type of credits that you have out here because, yes, most of them do report to your credit. If you have a collection or a charge off to them, it's good to catch up and try to pay them off because eventually they will affect your credit if they're not paid. Why is credit important? The benefits of a good credit score go beyond debt. Bad debt can affect many things like your housing application, insurance premiums. A lot of people don't think about how credit affects insurance premiums, but if you are applying for car insurance, they do pull credit. So you might be charged a higher rate because your credit score is not as high. So it's good to take care of your credit because of that. Security deposits for renting. If you tend to have a higher credit score, they may charge you a lower amount for a credit deposit. So taking care of your credit helps prevent roadblocks to many of your everyday life necessities. So other things credit scores can affect: securing better interest rates. So if you tend to have a lower credit score, you may be charged a higher interest rate than those with higher credit scores. So it's good to take care of your credit so you can avoid being charged high interest. Landing and keeping a job. This is something that people don't think about. When you apply for jobs, especially nowadays, they do pull a credit report and base your hiring off that. Renting an apartment, refinancing loans, even if you want to refinance your home, they do pull your credit. Purchasing a car, as many people know, you could be charged a higher interest rate if your score is on the lower side, or you could get a good rate, a high rate, if your score is on the good side. Getting a cell phone. So even if you're applying for, example, AT&T, they will pull your credit, and your rate may be higher or lower depending on what your credit score is, and even setting up utility accounts. So how to be responsible with your credit. Make payments on time. Don't borrow more than what you can afford. Don't borrow money that you don't need. So this is something that is very important. Don't borrow money that you don't need. And a way to prevent that is to save money. If you want to take a vacation, save up for that vacation. If you want to purchase something, for your home, furniture, save up for that. That will prevent you from borrowing money that you don't need. Never max out your credit card debt. A lot of people, or I've seen that people think that it builds your credit when you max out your credit card. Actually, it doesn't. It can affect your credit in a negative way because it's called credit card utilization. So you want to, if you do have a lot of credit card debt, you want to try to work on getting that paid down. As you pay that down, you will see changes in your credit score, as long as there aren't any other negative factors that are being added to your credit report. Pay down as much debt as possible. And one of the ways that I encourage a lot of our members at the credit union, because they do come to me and they say, well, how do I get my debt paid down? You can Google, the snowball effect, where once you pay one debt down, you use that payment plus the payment you were already paying on the current debt to pay down the new debt. So once again, that's the snowball effect if you want a fast way of paying your debt down. Do not habitually apply for credit. Inquiries do affect your credit score. So lenders constantly checking your credit can drop your credit score a point. So that is very important that you do not go from here to there applying for credit just to build credit, or if you're having trouble borrowing. Sometimes it's good to just slow down and just step back and save. And be careful who you co-sign for. I do see this a lot, that people co-sign for family and friends, and then things go bad. So you just got to truly trust and know that the person that you're co-signing for will pay off that debt. Because anytime you co-sign for a debt, you are responsible, 100% responsible, as much as the other person. And I tell our members all the time, treat your credit like your identity, because it is your identity. You can go out and you can apply for something at a bank, and not only do they look at your personal information, as they do your identity, they look at your credit. So it is a way to identify who you are as a borrower. Where to find resources about credit? I really just put the logos on this slide because a lot of them are logos that people may be familiar with, but I'm more of a logo recognition, and nowadays people are logo recognition. But people are, they can get a free credit report every year at annualcreditreport.com. This is something that the government has given to all Americans for free. Every year, you get all free bureaus and see what all is on your credit report. It has the name and addresses of all the lenders, collections, charge-offs. So if you want to see where you are on your credit report, it doesn't have your credit score, but it does have your information that's on your credit report. Dave Ramsey is a lot, he shares a lot of good information on his website, and he has books that you can read. The Consumer Financial Protection Bureau, they have a lot of resources online about credit where you can read, and Smart About Money is a website. It actually will only be around till about the middle of July, but it has worksheets and money management courses and literature that you can read. So there's a lot of resources. And then I will end with saying on this slide is that YouTube, that is one of the main ways that people are finding out a lot of information, and YouTube is a lot of ways that I've taught a lot of our members and people in the community about financial education. So if you have a question, your answer may be on YouTube. For example, how to budget, how to improve your credit. So check out these resources. And I did bring the worksheet, the flyers back there, the same flyers back there that you can't take home with you. I wanted to speak on loan agreements because people can just sign and not know what they're signing into. So it's always important to know what you're signing into and to walk away feeling like you know and that you're comfortable with what you sign into as a loan agreement. So when they take an application, they get your personal information, of course. But there's part of the loan agreement that you need to understand. The date, the account number, your borrower information, your interest rate, your annual percentage rate, the finance charge, the amount financed, and the total number of payments. Now, this next slide is actually going to go into detail of things you need to watch for in a loan agreement. You need to understand the total amount that you're borrowing, the amount that may be given to you directly or not given to you directly. You need to understand the fees that are being charged to you for borrowing. For example, in this slide, there is a $7.50 fee, there's a $435 fee. Would you have noticed this if you wanted something so bad and they approved you? Would you just sign and not look at what they're charging you for what you want? So you want to take the time to make sure you understand the fees that are being charged. Now, 2 slides ago, I talked about the annual percentage rate. It is very important that all borrowers understand what they're being charged. The annual percentage rate is the cost of your credit as a yearly rate. That's what they'll charge for a year. But that annual percentage rate is broken down into a daily rate. Annual percentage rate divided by 365 is what they will charge you daily for borrowing that money. So you need to understand how much money they are charging. Finance charge is the total amount of dollars that you will pay for borrowing the money. And the amount financed is what you're originally financing, and then total of payments is the total of the interest that you're charged plus what you're borrowing. So when you borrow money, it's important that you identify these things before you sign and that you agree. So if you were to see, as in this example, someone borrowed $15,057.50, they were charged $1,624.06 in interest. That's not very high. That's more likely to be an auto loan, and people may find that very reasonable for an auto loan. But if that annual percentage rate had said 27%, that finance charge would more than double or triple. So that's why it's very important to pay attention to that. I also wanted to speak on grace period. For a grace period, a grace period is where the length of time after the due date during which the payment may be made without penalty. The reason why I want to touch on that is because a lot of people ride out that grace period or even further. Because something comes up and they have the money and, they want to pay, instead of paying their mortgage payment, they may say, okay, I'll double it up next time and I will pay this other thing, which may not have been as important. But once you pass that grace period, you're going to be charged fees. So it's important to understand that not to go past that grace period. If you can, pay your payments on time as much as possible. But you need to understand when you borrow, it's very important to understand, I keep saying need to understand, it's very important to understand your grace period and when your loan payment is due. So I am going to just summarize what we've learned today. Credit is important more than ever. And the reason why families and different groups are on this slide is because it affects more than just borrowing a personal loan. It can affect your employment. It can affect you purchasing a car. It can affect your family and your family's future. So it's important to take care of your credit and teach your kids and the people in your community to take care of credit. And that's all I have for this presentation, and we will move on to questions. Yes, sir.
So now, if you are borrowing, what is an appropriate interest rate to be looking at versus one that might be overly inflated?
Well, if you're borrowing on a personal loan, anything above 8% is considered a higher interest rate. On an auto loan in this market right now, 3% or less is actually a really good rate. So you just, you want to be careful. Now, if you do happen to have, I will say that sometimes if you're borrowing, and your credit score is low, you may have to work your way up. So you may have to be paid a higher interest rate in order to borrow. But if you have to borrow at a higher interest rate, pay that on time, so in the future you won't have to pay a higher interest rate on other debt that you borrow. Yes, ma'am.
Charge-offs. If you're doing some type of charge-off, how would it impact your credit rate?
A charge-off is very heavy on the credit. You can go from a 800 to a 600 with a charge-off. Any kind of collection. I've seen in my career, people go from 700 credit scores to 600 credit scores from not paying a $35 collection. If you haven't, pay it because it doesn't cost you at that moment not to pay that collection, but it will cost you in the long run, especially if you want to borrow.
Well, I think too, like when sometimes the creditor is calling you, like I said, saying, oh, well, you owe 600, but if you are able to pay us today, you can pay us 300 and we'll write it off or whatever. And they don't explain like you were just seeing all the depths of, they'll say, okay, well, what this is being paid, but that charge-off itself is still going to negatively impact the overall score. And so I think in the urgency to hurry up and try to pay,
Right.
people will go ahead and sometimes negotiate a charge-off amount, and then you really let yourself a little bit deeper.
Yes, so that is what we call a settlement. With the collection agency, they do have settlement amounts. And so it's very important to understand, like you said, the terms of that agreement. If it is a balance, we always encourage members to pay the collection in full. But if the collection agency is trying to work with them and for settlement amount, then that's something that, you know, the person can do with the collection agency. However, make sure that they will show your balance paid in full once you pay.
Is that right? Yeah.
I'm sorry?
Give you something in writing.
Yeah, give you something in writing, it's always good, and, you know, keep a watch on your credit report to make sure that, it has zeroed out. Yes?
So how accurate are those various credit apps that will like tell you what your score is regularly or give you boosts? How accurate are those and how effective are they at helping your credit?
So credit apps use different models. Just about any lender uses a different model. The credit apps, like Credit Karma or I don't know what the other ones are, they use a specific model that may not match up with the model that your lender is using through the Equifax that they're using. So they're not very close. They can be, sometimes they can be close, but a lot of times they can be very different. So the way that for you to get as accurate as possible is to pay your collections and pay your debts and make your payments on time. Because if one of those credit apps is showing you as a good credit score, but you know you haven't paid your debts, then there's likely that your credit score is what is not a good score. So we know as people what we've paid. So like I said, if we're showing an awesome credit score on something and we know we haven't worked on it and we haven't paid off debt, it's likely that it's still not good. I think that might be the end of the question. Nobody else? Well, thank you for having me here, and I hope you all learned everything about credit. And if you have any questions, feel free to reach out to me. I'm Tasha at Upstate.